Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, what we're going to talk about today is a buy and hold stock that I have, Procter & Gamble. And what I love to do is this. I love to use it when the stock is near the high and I write a covered call, not expecting to have my shares taken away. Now, what I'm going to do is show you how I do that. And more importantly, I take those covered call profits and we turn right around and we buy a dividend paying stock. And I'm going to show you that stock as well. We do this all the time. In fact, that's what I do. I buy stocks, we write covered calls, we take the premiums or profits, and we put them into dividend paying stocks, monthly dividend paying stocks. That is our dividend tree that bears the fruit for which every single month we get paid. We go from a semi-passive income strategy to a passive income strategy. I'm telling you what, at the end of the day, if you're going to retire, you want to consider selling premium, which would be writing covered calls and selling cash secure puts. You need to learn it. Stop sitting there watching other people advance, right? Getting ahead, paying the bills, living the good life, using the stock market. You can do it. There are so many educational tools out there. You do not need to sit there and watch everyone else have success. So with that said, let's get going. We're going to knock it down. I'm going to show you exactly how I do this. So these are my current trades right now. I have many trades on the books. By the way, if you do not know, I am retired from the 9 to 5. I am a professional stock trader. I sell premium. We use covered calls and cash secure puts. I do have buy and hold stocks, and for the most part, I hold them for a little bit of stock appreciation, but really their dividend. Those buy and hold stocks will ebb and flow, right? They'll go up and down. Well, how about we write a covered call on the top side, never expecting to have our shares taken away. And when the stock rallies, we write the covered call, it falls off, which means we can then buy that option back for pennies and we pocket what would be doubling our dividends, right? We're looking to double our dividends where we collect the 4 dividends and then during the off months, we write near-term covered calls for 30 days. And what we do is we write out of the money strikes where all we're looking to do is collect what would be the company's quarterly dividend. So look, if you like anything you're about to hear, I want you to subscribe to the channel. Come back every single week, show you timely and relevant covered call trades. What we're trying to do is generate that passive income in retirement, right? Whether you live the good life or you're just looking to pay bills. Hey, look, we can use the stock market. We can use the selling premium strategy to then buy monthly dividend stocks. And we do that all the time. So hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now what we're doing is we're talking about Procter & Gamble. So I own Procter & Gamble, and quite frankly, my cost basis is much lower than $149. It's a buy and hold stock, and as it ebbs and flows, what I love to do is during a stock's off months. What does that mean? A company has earnings, they have an X date. Those are big deals when it comes to selling premium because it can move the stock much more than it typically moves. So we want to try to avoid the 1 month window for which we have the earnings report and the X date. If we can avoid those, typically a stock will trade pretty normal during its off months, which is about 2 months. So we can absolutely use a stock's movement. And what I love to do is this. Every time a stock rallies, my buy and hold stocks, every time they rally to a high, I will write a covered call. And in this case, for example, I would have written a covered call at 157X as it's moving to 157. What we're looking to do is to grab a covered call premium that equals its dividend. Well, these dividends represent about 79 cents. So the key here is let's write a covered call, which is about 30 plus days. And again, the expiration of this covered call does not happen during the X date or earnings. We're hoping the stock will trade very similar to what it's doing here during this time so we can collect that premium. Meaning, we let the stock rally, and when it starts to get tired, right, you're going to start to get some selling. Right? You get these buying right here, we get some selling. It happens, right? A stock does not go straight up or straight down. It moves up and down. So we want to use that to our advantage. So in this case, here we are with Procter & Gamble. Procter & Gamble recently hit as low as about 143. And you can see it hit 143 back here and back here. So, by the way, if you're looking to get involved with Procter & Gamble, I'd be looking to get in at 143. The stock has moved higher. Now we get all this buying. The market has actually moved higher. Procter & Gamble's going to move higher. The question is, at 149, I want to write a covered call. So obviously I'm going to write a covered call before, with the expiration, before its X date. We do not want to have a covered call run through an X date because, quite frankly, that's when a stock can move or be most volatile, right? I read a covered call, I make 1%. Well, a stock can move up to 10% during its earnings period. So what we want to do is try to pick these moments where, as the stock has rallied and it's moving higher, it starts to get tired. Right? It's starting to get tired. We can go ahead at the top side of its movement, we go ahead and write a higher out of the money strike. Now, what I like to do, and this is where you really need to listen. You listening? Right now is where I'm going to pick a strike price for which I believe I can make what would equal its quarterly dividend when it's trading near its resistance. You see how there's a resistance here? So as it's moving higher, do you see this? As it's moving higher, here's its resistance. Notice what happens. It tries here, doesn't get there. Comes back, tries again, doesn't get there, starts to sell off. Now we want that covered call right there. Because now we're going to write, let's say, the 57 strike, and we might be able to get about 70 cents for it, and then we watch the stock peel off. And Procter & Gamble is one of those stocks where, outside of any sort of monumental news, it's going to trade in a range. And you can absolutely see this range over the past year or two. I mean, way back in 2022, had you bought the stock right here, you'd have been not happy. You'd have collected the dividends, for which they have quite a few dividends. But what you want to do is during those off months, you want to be writing the covered call in between, right? So what we look to do is use those moments, and right now's that moment. We have the dividend right out here. So we're going to get a little bit of a dividend move. So what I want to do is write a covered call way up here. So hopefully what happens is they run the stock up to collect the dividend. They are the shareholders on record. They collect the dividend. Chances are they sell it and it moves back within its trading range. Now looking at a covered call, I actually did. Here it is. With Procter & Gamble moving higher into its ex-dividend date, right? We have the dividend out here. Got to be the stock owner to get it. Look what it's done. It's rallied higher. So what I did was, let's pick that 155 strike. And here's the deal. It's going to be a 23-day trade, and we did 3 contracts. We're collecting about 70 cents, which is close to its quarterly dividend. But look, we would have to get all the way up here. Will it get there? I'm not sure. But what I'll tell you is this. With the dividend date coming up, chances are it gets to about here, and then it falls back. People will get the dividend, then they'll sell the stock. And even if it did rally above, because it's a 23-day trade, chances are I'll be able to manage the trade, meaning I could buy it back, even though it's above the strike price of 155, I could buy it back and then we roll it to the next line of resistance, which would be back here probably at 157. We collect a credit and chances are the stock will gas out like it always does. So really what we're looking to do is use the stock's off months, meaning no earnings, no ex-dividend date, and we only write covered calls when the stock is near the top of its trading range. See, I don't want to be doing it down here because the likelihood is that it will rally higher. I'd have my shares taken away. And in the case of Procter & Gamble, I'd have a heck of a capital gains tax, right? So we're looking to avoid having our shares taken away. They call this covered call overwriting or portfolio overwriting of your buy and hold stock. See, most people are buying and holding so they get the ebb and flow. And I get it. Look, if you bought back here, you're basically break even here. But had you written a covered call at all these high points, you're absolutely making more money than the typical buy and hold investor. Now, what do I do with these profits? We got $204 that's going to hit the account. We need to make that $204 go to work. So what do? I buy a monthly dividend paying stock. So in this case, when I have covered call profits, what I like to do is buy many different monthly dividend paying stocks, but the QQQY is one that I'm looking to buy right now. You can see the QQQY pays about 62 cents. Its last distribution was 93 cents, and before that it was $1 and $1.10. Here's the deal. The QQQY uses options, daily options, to generate its nice monthly dividend return. I invest in closed-end funds that pay anywhere from 9 to 12%, and I'm happy with that. These new monthly dividend stocks, ETFs, that use options to generate their monthly dividend, I'm telling you what, they are the rage on Wall Street because they can generate high monthly per share payouts. And I'm telling you what, look for QQQY to pay anywhere between 40 cents and $1. I will take that any day of the week, considering I invest in closed-end funds that pay me anywhere from 9 cents to 12 cents. So if I'm knocking down 63 cents a share, man, talk about passive income. Hey, look, if you want to be a part of my membership and hear about things like this all the time, you need to go to cptdashboard.com, click Upgraded Dashboard, and get your 1 free month offer. Look, 2024 is going to be a big year, largely because the Fed's going to reduce interest rates. That means money will flow into the stock market. Now, look, I don't have a crystal ball, just like you don't have a crystal ball. We need to follow the Fed, and at least that's what I'm going to do. And we're going to continue to sell premium, then buy monthly paying dividend stocks so we can have that dividend tree, right? That dividend tree that bears fruit every single month, just filling the wallet so we can pay the bills, live the good life. Absolute 100% passive income. Hey, look, subscribe to the channel, bang that like button if you like what you heard today. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.